Good morning, traders. It is 8:03 a.m. Chicago time on Tuesday, voting day here in the U.S. Get out and vote, please. Please get out and vote. It is 8:03 a.m. Chicago time. This is episode number 2353. I think that's correct. Let's see. Did I change the number sequence as I'm doing 50,000 things this morning? Yes, I did. 2,353. Imagine 2,353 episodes so far, but we got it done. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. First and foremost, we're going to jump into our convergent trading pre-market summary sheet. This morning, we have a mix to slightly bullish, mild risk on sentiment in the markets this morning as we took a pop higher just a little bit ago and broke away from our point of control, the overnight point of control. We were mainly in balance through most of the session. This morning, actually, forget these are old. This morning, not much to account for here in terms of what's new to report. Mixed picture out of Europe, and the dollar is gaining, so a little bit bearish for U.S. stocks, and other than that, really not all that much. Crude oil is soft this morning. Crude oil put in an inverted hammer yesterday on the daily RTH. It tested above the monthly high, prior month's high, and it came off and is trading below yesterday's, below at the bottom end of yesterday's range, or actually below yesterday's range at the bottom end of Friday's range. So crude looks exhausted to me, and that's about it. Before the open today, we got Deutsche Post, which is on the DAX, Bayer, same, Builders for Source and Constellation. And then after the close, we have Walt Disney, which is a major, and many others. I don't want to list all the earnings. It's a huge schedule of earnings. You can always look it up online, many calendars for that. Occidental Petroleum and Lucid Motors. Motors only has $200 million in revenue, but closely watched as the future of things. Looking at the calendar this morning, really not too much to report. Balanced trade out of France came in a slightly worse. Retail sales out of the EU in line. Retail sales year on year are better, came in at negative 0.6% versus negative 1.5% expected. And then we get IBD tip economic optimism at 10. So nothing really to talk about API crude oil stocks after the close. But this evening we get inflation out of China. That's the main and most important release, expecting 2.4 is the consensus, 2.4%, 2.6% forecast. That's what we're looking for. Looking for your votes, folks. Please take a moment. There is a link at the top of the live chat. It is pinned to the top. Click on it, and it has a link within it. It's eclear.me/event-voting. Please vote on how the vote here and go vote for your U.S. congressman, congresswoman, state legislature, and all that stuff as well before the polls close this evening. But give us your polling vote and your prediction on how we'll close today versus the prior session. And at the end of this Trader Bite, we'll look at the trades and we'll put them on. Again, eclear.me/event-voting. I need at least 100 votes. We're about 40 right now. Get voting, please. So back to the summary sheet. We're looking at an S&P that is in a multi-distribution profile so far. The point of control is at yesterday's high, 38.22. Basically, the market accepting yesterday's high as balance. The inventory is 37% long, so pretty even. The Nasdaq's leading this morning, up 80 basis points, and the range is only 35 points so far, rounded 35 points. So Overall, slightly bullish kind of tendency, but overall, I think we're in balance. We're on top of an MC point of control in this area. Taking a look at yesterday, for those of you who listen to the morning show, it was done early. I talked about the primary scenario being given how we are configured and what we did on Friday. The expectation was, because the overnight session kind of pushed almost to Friday's high of 38.05, but came short on the overnight high. It seemed the high remained weak, but it seemed like the buyers were relatively weak. The expectation after the open is that we pull back. The number we're looking to pull back to is 72. I said that we need to watch 82 as the over underline, the LIS, the line in the sand early on. If it gets below 82, you're looking for 72, looking for a turn at 72, and looking for a push through the 38.05 to 38.10, chop 38.10, target 38.20. The multi-day target for this week, the key target for this week, is to cancel out what the FOMC did and to come back to the FOMC point of control, which is at 38.4750. But before we do that, we got to take 20. So we're likely to test 20, see resistance at 20, and then balance, look for a take of 20, and then we're likely to push to that 47.50 and 50 area right up in here. Okay, this is what actually happened yesterday. Here you are. So there's the 82 right here. Market opens, tests up quickly, tests the 3800, comes off, goes down to where? Goes down to the 71 and a quarter. Remember, we're looking for 72, went to 71 and a quarter, consolidates in the middle, retests the 3800. So now we have a weak high and we have a double IB high stat. So this is a quantitative setup now at the 3800. So we're looking for the 3800 to get busted. The question now is where the entire play for the whole afternoon from about 9:30 my time when the IB was set till it broke, the entire thing is about where can I get in long with defined risk and take advantage of when it breaks. I did not see anything. I saw just a massive amount of chop. It just kept pushing to the extreme. If you look at what's happening here, it pushes up, slips down, consolidates at the VWAP and mid, pushes up, pushes down, slips down, retests from below, holds the middle, and then finally what we see is, if you're a Convergent member, I talked about this in real time and set up the trade in real time. What we finally see is large prints on this push back to the IB high. We have a very small, hard to see pullback right here, that red bar right here. And that's the long setup, and then it exploded. The goal is 38.05. That's the high from Friday. And then from there, 38.10 for chop. And then ultimately, we're looking for 38.20, and it worked out beautifully. So you can see it went to 38.10, chop around a little bit here, pull back to the 38.10, and then ultimately 38.20. I want to remind you that this is not how it always works. It doesn't work this beautifully. This is kind of textbook, which happens maybe, I don't know, 3-4 times a month, but most of the time it's not this clean. So I don't want to hold this out as, hey, look at me, I predicted the market, and the market followed my every wish. But what I'm showing you here is if you didn't have a plan and an expectation for this, it would have been very hard to hold on to the 38.20. It'd be hard to recognize that this is a very strong possibility that we would break the IB high on this double IB high stat, and that if we do, which is where people, most traders I think fall, is they have a prediction, they have an expectation, they take the trade, and then they can't hold on to it. Tell me if I'm wrong. What is the biggest problem you have on execution? One, executing, just waiting too long or getting in too early, FOMOing in. That's one major issue. The second and bigger issue, which is a psychological issue, is the ability to just hold on. Just hold on and let the trade kind of run to where you're expecting, because it's hard to have confidence in the homework and where we expect it to go. So what we do is we get in there, we have some conviction, yes, it's working, and as soon as it stalls or starts to pull back, boop, I'm out. And what we've done is we've got an upside down risk reward ratio, or R factor, and it's just long term. It's a very difficult way to trade, not to mention stressful. So that was yesterday. Went to 38.2175, so pushed through by 5 ticks or 7 ticks. And then since then, what we've done, and that brings us to now, what we've done is, we finished very strong yesterday, so we do expect it to kind of walk itself up. And what we've done is we've pushed higher, pulled back. Where did we pull back to? We pulled right back to the 3,800, to the breakout point, to yesterday's IB and the century figure. And then buyers come right in and took it right back up. Relatively bullish action still. And I'm still looking for that 38.4750 and 38.50 as the key equilibrium price. Here's where the bigger picture, here's what's important in terms of the bigger picture. So let's zoom in here a little bit. What we've done, if you recall, is we opened in range on Friday and we closed in range on Friday. This is the basis for that plan that we're likely to push higher into the 20. The 20 comes from the high of the balance day right here. This is 20 right here. And it comes from right here. This is the next key resistance area at 15. So 15 to 20 is the sandwich right in here that we expect the market to stall out, and boom, it stalls out right in the center of it, right at 20, right? So what we've done is the clue that we're likely to go to 38.47 is from last Friday. And I talked about this on Friday, that if we start to, it looks like we're opening in the FOMC range. If we start to move into those singles, we're very likely to push to balance of that day. This is a common setup using market or volume profile. We're expecting it to go up here. And so yesterday, this is why. I don't, given the range stats, given how much can be accomplished in a day, especially without news like we have currently, yesterday and so on, we only expect so much in terms of range. And so we set the 20 as the target. But which is pretty decent range from yesterday. 72 to about 22 gives us 50 points. We can't expect much more than that. That's a relatively common amount. 47 points is common, and up to like the spreadsheet says, the pre-market summary sheet says 88 is what we would consider the edge of what is normal, but what's common is somewhere between 47 and 50 on the day. So with that being done, and with us being up here, this puts the magnet at 47.50, and this is what I would expect. I would expect the market to get sucked into that former balance. This is how an auction works. And so having that plan is really important to, it's really important to be able to see it or envision it happening before it happens, and then most importantly, to hang on to it when it does happen. Okay, so I'll get off my soapbox now. So here we are. I showed you this yesterday. I showed that we moved back into the prior balance zone, the prior MC point of control. We tested it. We held it. We finished Friday strong. Here's your Monday. We have a pretty good base. So I've been bullish since Friday's action. I've been bullish because the expectation is we would turn up and get into that 44, 47, 50 area above. We are back inside of this microcomposite, and the most logical price to test is right up here, and that's your 47, 50, 50, 44, depending on whether you'd use TPO charts or volume profile charts, whatever, it doesn't matter. But we are on our way. So to me, the most important thing that we need to see today, and if we look at the relative delta, it's relatively strong, no pun intended, controlled by small lots. It's kind of drifting up in the overnight session, but there's some large lot participation there. There was no real news to move the bigger numbers. Let's move somewhere else while the tick data is being downloaded. So this morning, my main expectation, and you did vote, right? You voted on the poll. My main expectation is an open auction out of range, a retest of yesterday's range, potentially pushing into the prior point of control and the prior settlement price. Okay, right in here, expecting that to be tested down into the 10 is very possible. And then I'm expecting it to put in a higher low, an impulse, and then to push the overnight high, and then to start just drifting up into this 4750. So we're looking for the 4750 from 10. That's only about 37 points of range. Not a big deal. NBD for the ES. That's your primary scenario. I'm looking for a little bit of a pullback into the meat of yesterday, if anything, but I am looking to trade from the long side. We may have a gap and go situation. Gap rules apply today, and those rules state that if we don't see the market pull back and we see it move in the direction of the gap, in other words, it's very, very weak pulling back and it starts to move in the direction of the gap, we do not get short. We don't get short. Our job becomes much, much simpler in that we are now looking to detect areas to get long, areas to lean on to get long, and our target's 4750. So as long as we have some distance to that 4750 versus the size of our stop, then we have a good R factor, and that's a trade we can take. Okay, let's get back to voting here. And let me show you what's on deck. So we're looking for what has happened. All right. So the survey says, all right. So these are the settlement prices from yesterday, and we're really just pulling a comparison of settlement. Your results show that the S&P is very likely to settle today above yesterday's settlement, which is 15.25. The NQ is very likely to settle above yesterday's settlement, which is 11.014 1/4. The survey shows, the poll shows that the Russell is expected to, by a factor of, wow, okay, like 90%, that we're very likely to close above 1813.90. And then for crude, it looks like crude has a little bit of discord, about 34% saying yes, and most of you are saying no in terms of crude settling above 91.79. And then for the 6E, we have about a 45% versus 55% saying no, we are not likely to settle above yesterday's settlement in the 6E at $1.00565. So we're looking to put on trades, thumbs up trades for the ES, NQ, RTY, and thumbs down trades in crude and the 6C. We'll execute those here in a minute. We're going to look for at least a 1R factor trade. If not, I'm going to put bids in to get that, and then we'll report back on how that worked out. Okay. Thanks for voting. Thanks for participating. Again, this is polling, the Polling for Charity Challenge. Whatever the balance of this account is on December 30th will be donated to St. Jude, including the initial equity of $10,000. So we're expecting to give $10,000 plus whatever we make on CME's event contracts, and we're going to give those to charity. If you have not checked out the event contracts and wish to do so, go to itrade.events and speak to someone from EdgeClear. This is the sponsor for this. I'm the owner of EdgeClear, just so you know. And if you're looking to trade events, come to EdgeClear to do so. You can do so through the Rhythmic platform that you see in front of you right here. It's very simple. You can choose different strikes to trade from, and different strikes have different prices. So you can see the 38.50 is trading for $5.75. That's the one we're likely to put on today, and others. And you also have access to the event contracts through CQG if you're using CQG already. Good luck, and thanks for participating. Cheers.